If you haven't paid your student loans in a while, listen up to this episode. I'm going to teach you some ways to get your student loans out of default. Sturgis Credit Repair is a 5-star rated online credit repair company. We help people just like you build or rebuild their credit scores. If you have no credit history, we offer products to help you build credit history so that you never have to depend on anyone co-signing for you. If you have bad credit, enroll into our service today and allow us to work on the negative items affecting your credit scores. We take no money up front, so start our service today for free. You'll get updated through your online account as well as receiving updates through your email. For those who are trying to buy a home, we're partnered with multiple real estate agents and loan officers who are ready to assist you with your goals. If you are a real estate agent, loan officer, or anyone dependent on customers with good credit, create a free partner account with us today. You can manually send or receive clients through your online account as well as track their progress before they go to someone else. Visit our website to learn more about our services. Hey everyone, I have been super busy here in the credit repair industry. Therefore, it has been a long time since I made any type of episode posted to our audio podcast channels or the YouTube channel. The social media pages have been, still have daily posts here and there. But as far as making episodes on educational topics, I have just been slammed with work. So I just kind of got a few minutes of free time. So I'm going to talk about something that has been very popular discussion right now, and that's student loan forgiveness. We're not going to talk about forgiveness. We're just going to talk about something that's important and has been brought up many times this year alone regarding people asking how to get their student loans out of default, meaning they miss payments on it. They just quit paying, is in default, meaning, it's a negative account on their credit report. They can't buy a house. They can't buy a car. It is just ruining their credit scores. So what are student loans? Student loans are loans that students apply for in college whenever they can't afford to pay the full tuition out of pocket. So the government gives all of these teenagers or young adults all of this money, thousands or hundreds of thousands of dollars, and the government expects for these people to grow up, they become an adult, and they pay all of this money back, with their dream career job that they're not promised. I have a different opinion on it. But of course, my one opinion isn't going to change anything in this world. So we're just going to talk about how to get these student loans out of default. So there's two types of student loans. There's the federal student loans, which are the main types. These are funded directly by the government. And then you have private loans. Private loans are funded from, your local banks or credit unions. Let's say if tuition costs $5,000 this semester, you're going to go to your bank or your credit union and say, hey, I need a $5,000 loan. Those are private loans. So you get a student loans for every semester you go to school that you can't afford to pay out of pocket. So let's say the average person go to school 4 years and there's 2 semesters per year. That's 8 student loans, which probably, $5,000 or $6,000 each, depending on how many classes they're taking per semester and the type of university. Well, let's say if this person is going to school to be a pharmacist, a doctor, a lawyer, whatever the case may be, engineer, this can be up to $100,000 or more in debt. I have clients right now with $150,000 in student loan debt. I have one that went to school twice and has over $260,000 in unpaid student debt. And, it has their scores in the 500, 400, somewhere in that range. So now that we talked about what are student loans, we talked about the types of student loans, and we talked about how it can affect your credit score, let's just give a little bit more information before we end this episode. So student loans goes into default when you're about 9 months late on paying your bill on it, or you're paying your monthly payment. That's about, 270 days, I believe, before a student loan goes into default. That means it's a negative payment history. The loan is it's almost as bad as a charge-off account. So pretty much 9 months of you not paying the account. it goes into default. So what does this mean? That means they can garnish your taxes every tax year. Since it's a government loan, they can take your tax refund until that loan is paid off. So you definitely don't want your loans to be in default, because every year a lot of people depend on their tax return to, make ends meet. So let's talk about the 3 ways to get them out of default. Number 1, loan rehabilitation. Pretty much this means you make 9 payments on time. You pretty much have to contact the creditor who funded that loan. So, depending on which government company gave you the money for this loan, you contact them and you ask if they have that program. You make these payments of 9 months in it, in a row without missing any payments, and it will bring your loan out of default. Now, the only thing with this, it is going to be based on your current income. So if you make $100,000 a year, don't expect to pay back $10 a month. So it's going to be based on your income. They're going to figure out a monthly payment that you can afford to pay every single month, and you need to make this payment on time for 9 months. The second thing is loan consolidation. So pretty much your loans, let's say you have 8 loans on there, they're all in default. Well, just like I said, we're making 9 on-time payments. Well, loan consolidation, you reach out to a company that does this, and they are going to repurchase all of the government loans, and now you owe this new company the money that you didn't pay the government. So you have the government loans here, which are in default, and then you have a new bank or creditor that's going to take those old student loans, and now you owe this new bank. So pretty much your student loans are out of default because you just paid them in full. Now you have a new account on your credit, and it's just one account, and you need to pay this new bank. Now, the only thing with that, if you miss a payment with this new bank, then you're screwed again, because now late payments are going to start reporting with this bank, and this bank doesn't have any type of programs like these student loan accounts. So be careful with that. And then the third option, which is probably the least realistic example there is, or option there is to just pay the student loans off in full. So let's say you stop paying these student loans when you were younger. Now you have a engineering job, you're a lawyer, you're a nurse, you're a pharmacist, you're making $200,000 a year, you have $80,000 in student loan debt. Just save up for a year or two and pay off that student loan that's in default. So those are the 3 easiest ways to get student loans out of default. So like I said at the beginning of this episode, I'm gonna make this one real quick and easy. I have a ton of more topics to discuss and episodes to make. So if you have any additional questions regarding student loans being in default, or if you should even apply for a student loan, just reach out to us here at Sturgis Credit Repair. 9 times out of 10, I will be the one responding to your questions, and I can help you and give you the best advice there is regarding student loans. Thank you for listening or watching this episode. If this video helped you, be sure to like it, comment, share it, and subscribe to this channel for more helpful videos like this one. Thanks for watching.